Welcome back. Well, one stock that's moved pretty well from the broader markets is Redington. Just pull up the intraday chart on that stock. It's moved to the high point of the day as we speak. Sharp spike is what we've seen in the last 2 days. It's up close to around 6 to around 7% odd. So Redington is one stock that's moving, and it's moving on rather large volumes. So just thought we'll point that one out. But let's move on then. We have Mr. Mishra, the Director Marketing as well as Business Development and CMD in charge at PTC India, who joins us to tell us how business is shaping up for PTC India. Remember, the company has not declared its Q1 and Q2 numbers still. So, Mr. Mishra, my first question to you is, you're running behind the clock, right? When will you declare your Q1 and Q2 numbers for this fiscal? Go ahead.
Yeah, good morning, Nigel. Let me tell you that we have declared the consolidated result for the group yesterday, and the numbers are really good, which you might have seen. The important thing which you asked me, I'll answer. We are ready as a PTC India Limited for the Q1, Q2 results are ready. But we would like to publish the results, the consolidated, which is the requirement of SEBI, and that will be done pretty soon.
When? Give me a timeline.
Timeline can be another 7 to 10 days. I mean, that's what we have in our mind. But of course, we have to complete all the subsidiary companies also. They have to prepare their accounts, and then we can consolidate.
So we will have you back for a chat at that point of time to understand how is the first half of the year that's panned out. But in this release that you put out yesterday, PFC, that's a subsidiary company, you're saying that there was a note, the forensic audit report was submitted in the first week of November, right? Could you tell us what were the findings? Have you all been told?
Let me tell you, the board has approved the recommendation, and we have submitted it to the regulators. And we confidently can say that at this point of time, most of the issues has been settled. But at the same time, we have submitted it to the regulators, so I cannot share much with you at this point of time in the national TV.
But you believe that everything will clear out with regard to this subsidy?
That with confidence I can say.
By when?
No, I mean, we have submitted our recommendation, the board recommendation to the regulator, but we are confident that everything will be settled as per the compliances and whatever we have promised to our investors in the past.
But you don't want to elaborate a little bit more? What were the findings of that report?
Again, let me tell you, we have already submitted the board recommendation, and it is available with the exchanges. So I'll not like to interpret here on the national TV.
Okay, all right. So we'll have to wait by then. But you're saying in the next 7 to 10 days, we'll get the results of the consolidated entity and your subsidiary, that's PFC. Things will gradually get ironed out. You'll have received the feedback, and you'll have submitted your side of the report as well. And you believe there's nothing untoward that the stock market should be worried about, or the shareholders should be worried about.
Exactly. Nigel, you are very correct saying that we have already given our views to the stock exchanges, and based on the consolidated report, you can say that both the subsidiary companies have done well, and including the holding company, and it is unprecedented, or I will say that's a record kind of profit for the company in the consolidated, as well as for the PFS also. Okay. The record is something which I would be happy to share with my viewers.
Okay, all right. Mr. Mishra, we'll have to wait by for those numbers, but let's talk about other parts of the business now. What's the situation with Hindustan Power Exchange? Now, as a trader, I understand you can't have more than 5% stake in an exchange. And I think you have close to around 24%. So what's the plan out here? Will you be bringing it down? If yes, how do you plan on reducing that 19% odd?
Nigel, we are the promoter of that company, and whatever share you have mentioned, till date, we have maintained that in that company. And at this point of time, we are not participating as a trader in that company. So we are meeting all the compliances as far as the CRC is concerned. So as far as the future of our shareholding and stakeholding in that company, we will be decided and will be shared at the appropriate time.
So you're saying that you're perfectly in line with the regulations right now. You're not trading on that exchange, and so you're entitled to hold your 24% stake in the company. Are we getting that correct?
You are right.
Okay, all right. So that's brushed aside for now. Otherwise, there would be a bit of a conflict of interest. But you're saying that you're clearing the air on that front. What's happening with the wind asset? I've been hearing for last many years the 288 megawatt plant, that wind asset, is going to be sold. quite a few years. I think the smile on your face is telling me that we have spoken about this in the past with various other officials of the company as well. SJVN, they had evicted some kind of interest out there. What's happening? What's the recent development over there?
Nigel, I mean, you said that we have discussed it, and at that point of time, two-thirds of the assets were in Andhra Pradesh, are still in Andhra Pradesh, and we had some regulatory issues, particularly the tariff-related issues, which were going on in High Court. The decision has come in favor of us, not only us, but all the wind generators in Andhra Pradesh. So that has really helped us. And the second thing which has changed the entire gamut of this wind asset is the payment which we are getting regularly from all these states. So the asset which was not doing so well is doing very well at this point of time. And we would like to see it in the new perspective. And if you are trying to say that whatever offers we had in the past, we should execute, I will like to just simply add that we would like to relook the things in the new perspective.
So now it's
then we will come to the investors to tell where we are.
So you're clarifying that this asset is not, you may not sell it right now.
I said that we are relooking it and trying to see the potential of those assets, and then we will try to decide on this.
Okay, so as of now, it's in a bit of a limbo. You're still in decision mode as to what to do with this asset that earlier you were looking to sell, the 288 megawatt plant, right?
We are not saying that we are not going to sell this asset. I'm saying that the situation has changed drastically in the last 6 to 7 months, and we had to relook the entire scenario.
Okay, all right. Final question then. Give us a sense on volumes. I think PTC used to do 87 billion units odd. Out of that, I think 30 billion was long term. What's the outlook on that? The street was waiting for that number to go towards 50 billion units. You want to give us some bit of a guidance on that front? We'll wait and we'll chat in the next 10 days once your results come out. But give us a sense on volumes.
Nigel, we have always emphasized that the long-term volume is the volume which we are looking for more seriously, because that's where the margin comes. And we have discussed on your channel in the past that PTC will be focusing more on the long-term volumes rather than participating in the exchanges as an agent. Now in this context, we are trying to find out which volume will come from and how. Now, one information which I would like to share, that one of the regulatory order recently from CRC, which has gone in favor of PTC regarding Teesta Urja supply to Haryana and Punjab, will be around 540 megawatt. So the order for Haryana has come, and it is in the favor of PTC that the supply has to start immediately. So that's one favorable order which I would like to share with you. The other major development which we are trying to do is, for the renewable, we are trying to enter into a long-term contract so that the balance of the portfolio tilting towards the longer or medium-term contract should increase. So that's our focus area right now, and no point giving the volume in last 3 months or 6 months, because there are a lot of things which you might be seeing in the exchanges. The prices have gone up. There was shortage of coal. So all this we will discuss when we will be discussing Q1 and Q2.
All right. So thank you very much. Good speaking with you, and appreciate you joining in with some of that perspective. Well, the markets kind of was down 30 points. It's now flat. It's in the green now, by the way, 18,484. So just kind of very flat trade. It's been that way for almost all of the 40 minutes that we've been trading now so far. Dheeraj Agarwal is now joining us. He's co-head equities at Ambit Capital. Dheeraj, it's a pleasure. Great to have you with us here as always. You've been broadly a little sort of cautious. But the point, though, is that the market at the index level has continued to make highs. I was putting out some data which showed that on the Nifty, even on the Nifty, broader markets, of course, the story is even different. But even on the Nifty, you only have, I think, about 32, 33 odd stocks out of the 50, which are back at October 2021 levels, even as, the market is 100 points away from that level. And of course, if you look at broader markets, I think the numbers would be even more stark. And I guess that is one reason why many don't feel that enthusiasm of new highs, Dheeraj. Any thoughts?
I think you've hit the nail on the head. So the headline index levels have made a new high, but the markets have been very, very narrow. In fact, the small cap index has retraced only half of the fall that we saw over October last year to June this year. And that shows you the extent of the lack of breadth in the market, and hence the so-called animal spirits is rightly so missing. So, in fact, we had sort of predicted that or forecasted that when we came out with our market strategy report some time ago. We had an index target of about 18,700. But looking at the valuation distribution of the market, we had sort of always believed that the mid-small segment will underperform in a meaningful way, and the market will be driven up to 18,700, primarily by large caps, which is exactly the way it has been panning out. So, yeah, I mean, I don't want to unnecessarily sound cautious at this point of time. Market is trending up; it can go a little bit higher, but it's broadly reaching a valuation zone where I don't think one should get extremely excited about a new bull run, and this is already being reflected in the breadth of the market, as you pointed out.
Hi, Dheeraj. The last time we chatted, you spoke about 18,700 and we're almost there. So good going. But you also told us that, on these new age themes, a couple of them, you all were getting quite excited. And some of that has played out. Policy Bazaar has suddenly come on everyone's radar. Policy Bazaar is, is one of the big outperforming stocks actually in the last few days. What's your stance on it now? I think the two picks out there were Zomato and Policy Bazaar. You continue to remain positive over there?
We continue to maintain buys on both. So, I mean, just to give a little bit of a perspective on how we approach these names, at the time of listing, we thought they were a bit expensive. We always believed they were great businesses from a 10, 20-year point of view. But at the same time, each great business also needs to come with the right valuation to be able to enter. But when after the price correction, the valuations became right, we've been constructive on both these names and continue to believe they will continue to remain choppy because the public market sometimes find it a little difficult to dissect loss-making companies or the near-term loss-making companies, and it takes time for the market to fully absorb the difference between the fact that on old existing businesses the profits already being made, but the losses are entirely because of funding growth. But we continue to remain positive and constructive on both these names.
Extend that to Paytm as well. I mean, that's been a rank underperformer. Today, it's having a good Friday, so to call it. But Paytm at this price, 1/4 of what it listed at, Dheeraj, would you get interested?
We don't cover Paytm yet, so sorry, I have no comments there.
Okay, you don't cover Paytm. Otherwise, amongst underperformers, are there any opportunities, Dheeraj?
Sorry, I didn't get the question.
Amongst underperformers, usually when we talk about stocks doing well, I mean, you're buying at highs, but the trick is to buy when things are looking pretty poor, right? Pretty bad.
Yeah, so one space, if you see this whole PSU euphoria of the last few months, the one space which has completely missed it is OMCs, so BPHP IOC. I think the valuations are very, very constructive. So, I mean, if you look at the whole PSU history and the market sentiment in the last 3 or 4 years, I remember 2018-19 when you tried to discuss banks with the investors. Nobody even wanted to discuss SBI. And then slowly in a year and a half time, market started saying that, okay, SBI is one PSU bank we're willing to look at because looks like they're doing something different and more comparable to ICICI and Axis. And then filtered over even BOB and Canada, and now all kinds of PSU banks are flying, right? So that's how the market sentiment always stacks up. It starts from disbelief, and then you keep on going down the quality chain. What's happening now may be slightly unsustainable, where people are not really focusing on any quality and all kinds of stocks are moving. But see, OMC, there have been short-term issues in terms of margins, etc. But none of these issues are unsolvable, and these issues can get solved longer term. Valuations are very attractive. So that's one space amongst underperformers we are positive on. The other one, on select IT names, we have been very constructive on, although they have moved in the last month or two. But from a year point of view, they've been ranked underperformers even now. So in IT, like in most other sectors, we continue to maintain do focus on valuation because a very, very high valuation, given the fact that growth is normalizing, will not sustain.
Okay.
But if the valuation support is there, like HCL Tech, which has been a topic and it's been doing well in the last month, we think it can do more.
Okay, all right. Dheeraj, in the past we've chatted about ICICI Bank and SBI, but it's ironic that the biggest component on the Nifty bank that hasn't really performed for a whole host of reasons, HDFC Bank. Do you think it's time now that HDFC Bank post this, spell of underperformance, it starts catching up and starts maybe outperforming some of these names? Or do you think that what we have seen, we like to see more of the same in the time to come? And I ask this because HDFC Bank is actually the clincher. If the markets need to move up, he needs to come into top form. Your take?
So I can't specifically comment on HDFC Bank at this point for internal reasons, but I will take this question to a level higher, which is many of the mega caps in the markets are not really performing, right? So even TCS is sort of flattish. The two largest private sector banks forming the highest weight in the index has been underperforming. Some of the large consumer names are sort of trading sideways. I don't think that will change in a big hurry, and which is another reason why one should not be extremely excited about the index, because the index, the absolute top layer is sort of peakish because of valuation issues. The bottom layer is not really performing. As we discussed, the breadth in the market is weak. It's basically the mid segment, or what I say, mega minus one. So large caps, but mega minus one segment, which has been doing really well. So SBI, Axis, ICICI, autos, barring the recent consolidation, have done very well, etc. And hence, it's going to be a stock picker's market. A little tough, not the clear go-go market where you can literally buy anything and make money.
Dheeraj, sorry, just on that OMCs, is there a fundamental kind of a call that things are going to improve, etc., or is just that stocks are available at half a time book, so what's there to lose? And these underperformers sector by sector come back into rotation. So this sector will also have its day under the sun. That kind of a trade. Is it a more tactical kind of a view? Go on.
Fundamental call is more long term. Whether the earnings will turn around this quarter or next quarter, I'm not sure. Maybe it actually won't. But from a longer term point of view, these companies have started working on integrated margins rather than a separate refining and a marketing margin. Because of the sudden and huge rise in crude this year, they have not actually been able to increase the retail prices as fast as what they should have, resulting in short-term losses, which might continue to plague for a while more. But if one takes a 2-year or 3-year view, and if these companies work on integrated margin concept as compared to trying to separate marketing and GRMs, they can easily make, and they have, on a sustainable basis, if you look cross-cycle averages, 14, 15, 16% ROEs. And they're trading all below book at this point of time. Yeah. So maybe there is a little bit of a wait. But when valuations become so cheap, you can't really try to time the fundamentals so finely for a turnaround, because it suddenly turns in the stocks rally, as we've seen in case of PSU banks.
All right, got it. Thanks very much. Appreciate you joining in, Dheeraj. It's always a pleasure speaking with you. So select IT services, OMCs perhaps, two areas which Dheeraj mentioned. We'll take a break here. The market's down 10 points again, so it's a flat kind of Friday so far. On the other side, Mitesh will be joining us for some technical trading ideas on the top of 10. Stay with us. That's coming up. Okay, flat markets, so not very much change to really report. Mitesh is with us, though, to take us through any trades that he thinks we should be taking. Mitesh, hi, morning. What do you have? What are you making of the price action so far? Not very much.
So I think the index is very quiet, Prashant, but a couple of sectors are very interesting. We had a call on HPGL today morning. I think the OMCs have come back into action. They are showing clearly signs of starting an uptrend. I think that's where good trades can be made. That about, I think, stocks which are on the buy list. I have a buy on Godrej Properties. That's a stock, which is given a good correction and now is re-entering some kind of an uptrend. I would recommend a buy here with a stop below levels of 1270. for targets of 1320 on the upside. And escorts after that big breakout for the last 3-4 days was consolidating, has broken out of the range again. So here recommending a buy with a stop below 2220 for targets of around 2385.
Okay, all right. Thanks a lot for that, Mitesh. Well, we have been speaking about the equity markets, and for the time being, it's rather dull out there. The Nifty is as flat as can be, but the mid-cap index is where the action is. For the time being, though, let's shift our focus from the equity markets to the commodity markets. Manisha Gupta is standing by to tell us about what's going on in the commodity space. Morning, Manisha.
Morning, Nigel. Thank you for that. I'm looking at metals as a sector, and there are 3 or 4 major cues that are supporting the metal prices. For this week, we are trading mixed on many of those metal prices, but we have seen the decline in US dollar after the US Fed meeting minutes, where there is expectation that you could be looking at a slower pace of interest rate hikes, and that clearly has been supportive for many of those metal prices. In any case, the fundamentals have been supportive. We've seen deficits for many of these metals, and finally, the demand on ground seems to be picking up, and that has been supportive as well. So what we are expecting for December is slower interest rate hike. That has done the trick. Also, China, even as the economic data has been on the weaker side and the COVID cases are increasing, but China also is pledging for loans and interest-free term to banks. So more stimulus coming in for China, especially for the real estate and infrastructure sector. That also is keeping the metal prices on the higher side. Markets also are looking at US and European Union electrification demand. That is expected to be a key driver, is what Trafigura says. And more banks and brokerages also seem to be turning positive now for metals. We saw that report come from Citi, Macquarie, and now Goldman Sachs says that the global commodity prices will rise from mid-2023. That is by when that they see the US Fed interest rate hike also start to go off. Goldman Sachs is most bullish, by the way, on crude oil and copper. And copper clearly has the best of fundamentals when you look at that. Inventories have continued to decline. There are just about 5 days of global inventories worth of consumption. And when you look at the deficit in 2022 is estimated at around 2 lakh tons, and that clearly has been supportive. Markets also are looking at the reports that have come in from the Minmetals Economic Research, which says that in 2022, the demand growth was 50,000 to 70,000 tons. But for 2023, they're expecting it higher at 110 to 120,000 tons. So all those numbers on ground also seem to be supportive there. Apart from that, when you look at the Chinese consumption in 2021 was 12.5 million tons. This year until now is 10.7. This is the data until the month of October. So when you add November and December, the markets do anticipate that we will almost reach the kind of numbers that we saw in the previous year as well. The expectation across metals, when you look at strategies, is in case of copper, most brokerages have given a buy on to this one for this year and the next as well.
All right, Manisha, thank you very much for that. So that's basically commodities in focus. Now, PNB is higher and so is ITDC. Vahishta is standing by on both those names. Vahishta, over to you.
Hi, Prashant. Thanks for that. Let me start with Punjab National Bank, which has received an approval of DIPAM for the divestment of the stake in UTI Asset Management Company for approximately 1,300 crores. PNB currently holds 15.2% stake in UTI AMC, and the objective is to realize a gain on investment. Moving on to Indian Tourism Development Corporation, wherein the government has fixed 7,400 crores as the indicative value for Ashok Hotel. The Ashok is among the 8 ITDC assets which are listed under the National Monetization Pipeline, which was announced by the Finance Minister last year. The Ashok Hotel's monetization will take place through the public-private partnership mode. Back to you.
Thanks a lot for that, Vahishta. Both those two flying away. But Sonal joins us to tell us about Oberoi Realty. There's an update that's come about. Sonal?
Well, yes, there is an update and a clarification that the company has issued. Now, remember, back in the week, they had spoken about an EGM which will be held on 1st December. And this was done to purchase one or more residential premises in the project 360 West. They hold a 32.5% stake here, but they have given more clarification because the worry was, how will they fund it? Will it raise debt levels for the company? And why did they not, at that point in time, speak about financing of this particular acquisition? So the company says that yes, they hold 32.5% profit share in this project, and they have pending receivables to the tune of 1,200 to 1,500 crore rupees from Oasis Realty, which basically holds 360 West. They say that company will pay this 4,000 crore rupees, which will be in tranches over the next 12 months, and entire consideration, according to the company, is cash neutral. So this is a big clarification, because the fear was that debt will go up because of this acquisition. Company will be able to recoup pending receivables from the 32.5% 42.5% stake, and that is something which will be used for this payment. Company will continue to be the main seller of the unsold inventory in 360 West, and the stamp duty that they're paying right now at the time of acquisition is something which can be set off against the sale that they will make of these units which are unsold right now. So these are a couple of clarifications that the company has issued, on the back of which ICICI Securities says that company is still continuing to retain control of entire sales of the project, and company's guidance of proposed transaction that it will be cash neutral will allay all the fears with respect to debt increase that the street had, and this has come in as a relief for the stock today.
Stocks up about 2.5%. So thanks very much for that. Well, time for some important market opinion. Our counterparts in Asia spoke with Christopher Wood of Jefferies, and this is on the entire Russian gas price cap issue, which, by the way, is still under discussion. There is no consensus according to latest reports. China's COVID strategy, the latest lockdowns there, and of course a bit about the Indian market as well. Listen in.
Well, I've always been very skeptical whether this is really enforceable. So I think we're getting to the moment of truth, but personally I remain skeptical. We're nearing the point of pressure now. And so to me, the interesting issue is, does all these practical issues lead to more focus on potential resolution or negotiation of the Ukraine conflict, which could then send the oil price lower and then send share prices higher. But clearly other people will buy oil at a discount if it's available. And this, we have to remember, there isn't a total unity in the world on the Ukraine conflict. There's a NATO view, but I personally believe the rest of the world outside the US, UK and the Eurozone has a more nuanced view of the Ukraine conflict. So basically China and India are buying lots of Russian oil, and I'm sure other places are too. But to me, the question is, does this Ukraine conflict go on through the winter, or are there efforts to resolve it? Because there have been one or two signs of dialogue, which makes me wonder if something's going on. So the base case is we are seeing clearly signals of gradual relaxation. But on the other hand, we're not seeing any evidence of a full-scale relaxation. The best signal of gradual relaxation is simply that the cases are surging and they're not imposing Shanghai-style lockdowns, but clearly there's all kinds of restrictions on activity. So to me, we're going to be in a bumpy ride this quarter, next quarter, but the outlook for Chinese assets look better than it did a month ago. Up till now, the biggest winner from India and China plus one has clearly been Vietnam. Vietnam's an old-style Asian FDI-led investment story. So that's the past, but I would say for the next 10 to 15 years, India has a very good potential chance to really to exploit this whole trend, because India now finally has a coherent policy under these production-linked incentive schemes to attract foreign direct investment. So that's a big start. But what's been interesting about India this year is just how resilient it's been in the face of monetary tightening.
Well, the market's as flat as can be, but we'll slip into a short break. On the other side, we'll get chatting with Suresh Ganapathy, banking analyst at Macquarie Capital Securities. We'll be discussing Jio Financial Services and IRDAI's revised consultation paper. You don't want to miss this.
Welcome back. 20 points lower. We are at 18,465 on the Nifty. Suresh Ganapathy is banking analyst at Macquarie Capital Securities. He's joining us right now to talk about, a new entrant into the financial services space, Jio Financial Services. Suresh has written a note recently, a couple of days back, outlining why he thinks this will be a disruptor for many existing incumbents in the space. He specifically mentioned two names, Bajaj Finance and Paytm, which are most at risk. Suresh, but let's start with the basics. Why do you think this will be a great moment of disruption? I mean, just explain your thought process.
Yeah, sure. So, one of the biggest advantages that JFS will come with is truckloads of capital. If you were to really take the 6% stake that they hold in Reliance Industries Limited, that at current market value is closer to about 1 trillion rupees or a lakh crore. And, that makes them the fifth largest financial services entity in terms of net worth. So imagine the kind of potential that they have got. And today, for example, Bajaj Finance is a net worth of closer to about 50,000 crores. So what we are talking about here is that at the end of the day, the eventual game for any NBFC, fintech, or most of the financial services entity is to enter into lending business and of course make money out of that. And for that you need capital, you need underwriting capabilities. And I'm pretty sure JFS, with the kind of people that they have on board already and the kind of capital and wherewithal that the entire group, in fact Reliance Industries, has in terms of execution, they can be a formidable force to reckon with over the course of next, say, 5 to 10 years.
Suresh, do you think, it'll be in your opinion, of course we'll find out soon, it'll be a organic kind of expansion strategy, or it'll include inorganic activity as well? In various sub-segments, yes.
Correct, that's right. So in various subsegments, it's going to be a combination of both. For example, in the insurance space, it's unlikely that the IRDA will be happy to give them a license through the acquisition route. Right, at the end of the day, if you look at the regulator, they have been pretty forthcoming in telling that they want to increase penetration, they want more players, they want to give licenses to newer players and thereby expand the scope of the market. So I'm not sure whether the acquisition route will be encouraged. In NBFCs, the Reserve Bank of India could be pretty happy because at the end of the day, they do believe that there is always going to be some risk with the NBFCs, and they are anyways been talking about the fact that larger NBFCs need to get converted to a bank. So if it's going to be Geo coming with its enormous amounts of capital trying to take over a couple of NBFCs, so be it. Reserve Bank of India is pretty happy with that, is what our view is. So it's going to be a combination of both organic as well as inorganic route that GFS will follow in our view, depending upon the segments that they offer.
And why do you say the most at risk are Bajaj Finance and Paytm? Why those two?
Okay. Yeah, sure. Look, I'm not going to get into specific names here, Prashant. I'm pretty clear about it. But then what I'm arguing here is like this, right? For example, let's take fintech as a category. Now, clearly, the biggest advantage that JFS has is the enormous amounts of data, the reach in terms of the customers, the reach in terms of the distribution outlets that they have got. And on top of that, they've got the capital and the ability, obviously, to eventually lend and make money out of it, assuming, of course, they go about hiring the right kind of people. So clearly, that can be pretty disruptive to the NBFC as well as to the fintech ecosystem. Because what happens here is that unlike other fintechs and NBFCs who are compelled to borrow at, say, 12, 14% rates from the ecosystem, from the financial markets, JFS will come with a very good AAA rating and can borrow at just the marginal spread over government security. So you can imagine what a competitive advantage that it gives in case you really can mobilize funds at that kind of rates and eventually be very competitive in all the segments that, say, a fintech or an NBFC operates. So a lot of good quality customers can indeed migrate to JFS at attractive rates in case they're able to leverage well their entire distribution ecosystem.
Okay. No, got that. So, I mean, in a way, do you see any impact on banks, or you think they are well placed to kind of face any disruption? Yes.
Yeah, so I think, Prashant, a lot will really depend upon the view that the Reserve Bank of India takes in terms of giving licenses to corporate entities, right? As of now, we are going with the assumption that the RBI is still reluctant to give licenses to corporate entities. So we will see how the regulatory landscape evolves. And then that if indeed is the case, very clearly, the GFS won't be able to raise deposits and compete with banks in those segments that banks cater to. So I think the relative risk of disruption, in my opinion, is least in the banking sector from JFS compared to any of the other sectors, because obviously banks will always have that greater advantage of the CASA deposits and eventually the cost of funds. And therefore, the highly attractive customers or top customers will always be with the banks because the kind of rates that they're going to get is very difficult to match.
I'll come to insurance in just a bit, Suresh. You have active coverage on Paytm as well. I mean, only if you want to. How is the business kind of, because they put out monthly updates as well. If you can provide our viewers with an update on how things are progressing, business momentum-wise, according to you.
Yeah, so the segment, of course, where they have, of course, positively surprised us is on the financial services front, whereby the growth in the distribution business that they have been seeing month after month, of course, is pretty strong. So to that extent, there is a positive surprise there, and there has been a little relative amount of cost consciousness also from them. But as I said, we still need to see accounting profits, and therefore there the visibility is still pretty low. So we'll see how things evolve there, and of course we also have we have to see how the competitive landscape as well as the regulatory landscape evolves.
No, absolutely, and that's a point that you made earlier as well. On insurance, Suresh, I mean, what's your view with these latest IRDAI rules on expensive management limits, etc.?
Oh, that's good. I mean, I think getting away with product caps and going with an overall EOM limit is giving a greater degree of flexibility to the players. And what IRDA is telling here is that I'm not going to micromanage it. You want to do, depending upon what kind of products you want, you give a higher commission rate. Your EOM at a product level could be higher, I don't care. But at an overall company level, this is what I'm defining. And that is really giving a lot of flexibility to the insurance companies. They've also slightly relaxed the limit for the standalone health insurance players. It is also good because clearly one of the challenges that the Sahis face in India is that they really run a very high operating expenses, specifically the smaller ones. So to get a slightly higher leeway of 35% compared to 30% for others is also a step in the right direction. Net, I read the current regulator being very progressive, very forthcoming. They've also obviously, as you know, liberalized the open architecture on the bank assurance space. You can now have 9 partners each, right? So all that obviously are steps in the right direction, which will only increase the profitability of the industry over the longer term.
You know, the no product caps and an overall EOM limit cap. How does this? So the regulator absolutely has been progressive. They're coming up with this Bima Sugam, right? An insurance aggregator, and which will offer sort of products at very low commissions compared to existing players out there like Policy Bazaar, etc., and others as well. Is there how does this? I mean, is this product cap or commission? No commission? Does it change anything for what how we should read Bima Sugam, the new entity, and what they'll be able to do in the market?
No, look, more than the product caps here, I think Bima Sugam as an entity, as a concept alone is a fantastic concept. Now, it all really depends upon how the ecosystem develops. You're talking about the entire value chain being taken through Bima Sugam, right from origination and settlement of claims and processing, everything you can do through that portal. So we'll have to see how it shapes up over the course of next 3-4 years. Who knows? I mean, Prashant, this could be the UPI moment for the insurance sector. I mean, it can only expand the market. What this actually does is a lot of intermediaries in the system. I don't want to take out any specific names here, but then they could be definitely, their business models could be at risk, right? Because at the end of the day, you have a government sponsored, let me put it this way, offering at very attractive rates and also trying to expand the market. And that very clearly gives a great advantage in terms of the current existing life insurance players to further expand the market and go onto that portal. But the intermediaries who are doing this business, their business could be at risk in case Bima Sugam does pretty well. And that's what actually happened to the payments business once UPI came in.
All right. Suresh, we'll leave it there. A lot more to chat, but we're out of time, at least on this interaction. So hope to have you back soon again. Thanks very much for joining us here on CNBC-TV18. Well, you know, the market's exactly where it was. So no real big change, no movement. 10 points lower, 18,472 is where we're at. We'll take your leave. It's a wrap on Bazaar from Nigel, me, everyone on the team. Goodbye. Trading ideas coming up on Chartbusters next.